So we will make a start. Welcome everyone to the Audit Committee. Before we get into the business, could I ask perhaps Andrew to introduce everyone that's joining us on Teams this evening, just so that everyone knows who all the officers are?
Okay, yeah, thank you, Chair. So if I can just go round the virtual room. So we've got Jackie Whitney and Claire Munster, who are going to present the item on complaints, which is the first substantive item that you've got this evening. We've got Mark Thompson, who's our Head of Finance, who will cover the updates on, along with Graham Cadle, who I can see has joined us. Graham is the Assistant Director of Finance. So they will cover the updates on the external audit and also pick up the Treasury outturn report. And then we've got Stefan from External Audit from EY, who will give a verbal update on the progress with the external audit. Thank you, Chair. Oh, sorry, I've seen Michael Bateman as well, who I believe is there for the complaints item.
Okay, thank you very much for that. Do we have any apologies?
Councillor Mahir.
Okay, any other apologies? No. Okay, moving on to the minutes of the previous meeting, just to pick up a few of the actions arising from those. Progress is being made on the appointment of an independent member, and hopefully we'll an update on that at the next meeting in September. We talked about training quite a lot at the last meeting, so some general audit committee training can be provided from a representative from SIPFA, which is the public accounts body. So that's going to be arranged imminently, I understand. And I've also set up monthly meetings with the head of internal audit to talk about some of the issues we spoke about last time to do with circulating reports and also monitoring the internal audit recommendations. Are there any other comments on the minutes? Yep, Councillor Smith.
The list of people present last time doesn't include Callum Wareham, who was here, I think. Is one item I wanted to bring up. The other item I wanted to bring up was on item 10, the 8th, I think it was bullet point. Where I'm recorded as asking questions about the risk assessments, and it doesn't particularly cover exactly what I said. What I was interested in was the how the risk assessment points were changing with respect to time. Appreciate that when they cease to be a problem, then they drop off. That makes life fairly obvious. It was more to do with what happens with ones that are, but how are they trending? How do we expect them to get worse, or how do we expect them to get better?
Okay, I think in that report, the narrative did state, when it pulled out the key risks, it did state whether they thought it would be short term or medium term, etc., which sort of covers that point. But I'm happy for the minutes. Yeah. Is everyone happy for the minutes to be slightly amended, just to take that into account, the fact that Councillor Smith asked that question? Yeah. I'm sure we can adjust for Callum being here as well. Okay, any other comments on the minutes? Yeah, Councillor G.
Yes, I think we agreed that you were going to take them to the previous committee and see the minutes of the previous meeting to the committee to see if there were any comments. Were there any comments?
Okay, has that been done? Yeah, no comments.
Can we put that as an action then?
Yeah, Councillor Smith.
For this meeting and future meetings, can we be explicit about who is on Teams and who is in the room, please?
Yeah. Okay, do we have any declarations of interest? No? Do we have any public or member questions? No. All right, so that brings us to our first substantive item, which is the formal complaints report. So just a reminder on this in terms of what our role is as a committee. We should be looking to gain assurance that our complaints policy is being duly followed, and to ensure that any significant issues that are arising from this are being dealt with appropriately. And also, if there are any kind of trends arising from this report, we can think about what other actions we want as a committee to come out of that. So, for example, that could inform our internal audit plan for the next year if there was a particular trend that we'd noted and we wanted looked at further. Okay, I think we've got Jackie who's going to introduce this. So over to you, Jackie. Thank you.
Thank you, Chair. Good evening, everybody. So for those that don't know me, my name is Jackie Whitney. I'm Head of Customer Excellence here at Wokingham. Corporate Complaints is part of the service that I head up. Claire Munzar, who's also on the call, is my Corporate Complaints Manager. So Claire, you've got the information in your packs, the slides in your packs. So Claire's just going to talk you through some of the highlights and some of the trends that we've seen over the last 12 months. Michael's also on the call. Michael is the Complaints Manager for Children's Services. So we'll come with a couple of comments around the social care aspect for children's. So if it's okay, Chair, I'll hand over to Claire, and then obviously Claire will just give you some of the highlights of the report. Thank you, Claire.
Thank you, and hello to everyone. So as Jackie said, the slides are already in the pack, or the presentation's already in the pack. So just going to do an overview of the highlighted bits. Now, from the report, we've said that we've got 71% of all our complaints have been resolved early. So these are potentially inquiries rather than complaints sometimes, but people call them complaints. And we've managed to do this, what we call an early resolution, which is something we've been working on for over a year now. And 71% of all the complaints that come into us, or labelled complaints, are resolved early. Now, we have had an increase in our complaints year on year. So we had 61 more formal complaints than we had last year. Now, we believe there's been a COVID impact on that. So 2021, a lot of people weren't complaining as much. They seemed to be a little bit more content with other things going on. And we did see a decrease in some of the complaints. But subsequently, when they've come back more complex. So when they do complain, there's more substantive information in their complaints that are more detailed. They take longer to resolve. So even though we've done 71% early, the ones that we do have been a lot more complex than previous to what we've had. So, but we are running a different program as well. Now we are highlighting our complaints. We're asking people to come in with their complaints and say, this is a complaint. This is how we will resolve other issues. We want people to make a complaint, because a lot of the time it isn't. And we can talk to them. We can talk to them early. We can bring them up. We're trying to resolve all of these things as we go along without having a formal complaint that escalates through the process. So the earlier we can resolve it, the better. And we do want people to come through the service. We want to record it. We want to monitor it, which is what we've been doing. So that might have an impact on the increase in what we've got. And we are very similar to other local authorities. Other local authorities have seen the same trend. They've seen that slight decrease through COVID, and then it's come back, and they've got the more complex complaints now as well. So, but we've done a new program where we're improving our writing skills to make our language a lot more easy. Not simple, but easy for people to understand. We're looking at a model called the 3 C's, which is the last page in your pack. And this is all around the principles of being clear. So having clarity, having confidence, and writing with care, not jargon and technical speak and legal speak, because customers, for us, are not really interested in that bit. They're interested in, this is my complaint, what's the answer? So that's what they want, and this is what we're working on. And we're trying to resolve that through the services, and the services doing this earlier. I will hand over to Jackie because I'm sure I've forgotten something. But Jackie, is there something else I needed to mention?
No, that's absolutely fine, Claire. So I think some of the, just looking at some of the learning has been around communication. So some of the root causes was maybe customers not feeling that they've been updated or the communication wasn't clear. So what we've done is we've produced this programme of work around the 3 Cs to make sure that we not only record complaints, but obviously we answer quite thoroughly at stage 1 if necessary to negate an escalation, because obviously the quicker we resolve, then the better for the customer and the better experience. We're also asking for satisfaction across complaints. So if somebody does have to complain, how do they feel about how we dealt with the complaint? And at the moment, the rating is good, which is great. So what that means is we are kind of improving our responses and making sure that we do give them detailed responses before they go out. Michael, is there anything you wanted to add on the children's social care piece?
Yeah, absolutely. Good evening, everyone. I'll very briefly just explain my role. So I'm responsible for overseeing and managing those complaints and compliments that are made via the statutory children's social care process, which is separate to the council's corporate complaints process, which is what Claire was just talking through. So I just wanted to give sort of an update on what we've seen with the volumes. So similar to the corporate side, we've seen a decrease in the volume of formal stage 1 complaints and an increase in the cases resolved at early resolution stage. So where we would want a social worker or a team manager to pick up the phone to talk to residents just to resolve their concerns informally, or, of late, even some face-to-face meetings. And for us, it's a strong statistical indicator that the culture around early resolution within children's, and it sounds corporately, is improving, which is a huge positive. The number of cases we've seen escalated to stages 2 and 3 have remained relatively consistent with the last 2 years. And then when it comes to cases that we've received via the local government and social care ombudsman, we have seen an increase compared to last year. But again, as I think Claire might have mentioned, as we understand it, the ombudsman has been dealing with quite a heavy backlog of cases due to the COVID pandemic. And it appears that last year they've gotten around to our caseload, which is why we've seen an increase. And one of the other things that I just wanted to mention is that the number of formally recorded compliments that we received in children's, both from children and young people directly and families, the volume of compliments far exceeds the number of complaints we've seen. So there was a total of 67 formal compliments that we received. So that's, a huge positive of the good work that's been put in with children and families. Just on the nature of complaints, whilst there's not been any significant volumes that would suggest any, I guess what we would say is systemic problems within social care services, the higher volumes of cases that we've seen are in relation to alleged inaccuracies within social work assessments, as in the reports, and around decisions reached by staff. So perhaps where parents feel that biased behaviour has been displayed in their engagements with social care workers. And just a small bit around sort of in terms of how we improve sort of from those cases where we identify perhaps elements of fault. So my role in the complaints function feeds into the quality assurance cycle within children's services. So I work quite closely with the practice consultants and service managers and operational social care staff just to highlight where fault has been identified so that we can take actions to improve. Whether this be sort of via, there's been bite-sized training sessions that have been run for staff, and, staff supervision meetings. The last thing I wanted to mention is that we've been focusing on a few areas for development over the last year. So we developed a programme of induction and training for managers across the service around the complaints process and best practices on handling of complaints, just to, I guess, to improve the understanding of those staff that are here, and also to, I'll say, catch those staff that are coming through the door so that they understand sort of what our expectations around managing complaints are, so they're armed and ready for starting in their roles. And what we've also been doing is delivering sessions on sharing the learning from complaints with staff. We've rolled out 2 so far, and the plan is to continue to do that throughout the year, just so that staff are appropriately aware of the matters arising from complaints and what we're doing to improve as a service. I think that's everything that I wanted to cover. Sorry if I've gone on a bit.
That's great. Thanks, Michael. So open the floor to any questions.
Okay, Councillor Harper.
Thank you, Chair. Just a question in terms of trends. You mentioned at the beginning about being able to identify trends. The data only goes back to Q1 2021-22, so it's difficult to see long-term trends. Can we have data, say, 5 or maybe even 10 years going back, so we can see trends in complaint level, even if it's just the overall complaints rather than broken down by department? Because as we say, we need to see these trends, but we can't do that with such a short time window.
Absolutely. I'll take that question. We can give you the data, probably going back about 3 or 4 years, but because we've improved our complaints process and the recording is better, just be aware that the data may not be comparable, because what you will see is an increase, but part of that is because we've tightened up our complaints process. We have a new system, an online system that we are recording our complaints in. We've introduced lots of training. Michael's mentioned some of the stuff across children's services, but we've also done some across corporate complaints. So absolutely, we can give you maybe the last kind of 4 years, maybe even 5 years, but just beware that some of the data may not be comparable, because it's really across the last 2 or 3 years when we've really seen better recording of complaints.
Yep, Councillor Davis.
Thank you. With respect to your comment about 71% coming through early resolution, I'm afraid I'm a little unclear about what that actually means. Does that mean that there are 71% of complaints that are not counted in this year's statistics that would have been included in last year's because they've been dealt with in a different way? Could you maybe help explain that?
Yeah, of course, no problem. So early resolution is where we have a complaint that comes in, we apologise and we fix it, and we fix it quickly. Stage 1 and stage 2 are formal. So essentially early resolution is outside of the formal complaints process. So whilst we record it as a complaint, so we are still recording it as a dissatisfaction from one of our residents, absolutely. What we're saying is we get in there quickly, we apologise, we fix, we put it right. Or it might be that we just need to tighten up on the communication, managing expectations. But we certainly converse with the resident. So as Claire's mentioned before, we will give them a call and we'll sort it out really quickly. What that does is it gets it fixed quickly. The resident has a better experience, and we don't need to go through the formal process of stage 1 investigation and then potentially in escalation to stage 2. So in summary, we do count it as dissatisfaction, so it is within all of our figures, but it's something that we deal with quickly.
No, thank you. That's as I suspected. So when it comes to, again, absent more detailed information, more data, it's hard to understand, but you referenced there being an increase this year over last of 61 complaints going through formal complaint process. But you also said you've been working for some time to get this early resolution in, and we're very pleased that it had done so. So is actually that 61, well, in last year, your numbers would have included the 71% of what are now early resolved complaints. So is that 61 actually a much worse number year on year than is being displayed by that? If we were to compare like for like, as you say, systems change, we want comparable data.
Yeah, sure, absolutely. So we had an increase of 61 compared to last year. That's in total number of complaints. So if you look at, I think it's page...
Sorry, Jackie, could I interrupt you just for a second?
Yeah,
so there's 71% was overall from the overall amount of complaints. So any inquiry that came in that was labelled a complaint. The numbers we've got on the second slide, the 244 compared to the 305, which is a formal complaints. So out of the formal complaints, last year, 2021, we had 244 formal complaints. And then this year we've had 305 formal complaints. And that's where the increase of 61's come in.
I still think you haven't answered my question. So my understanding is last year, there wasn't a concept of early resolution. Therefore, 71% of the complaints this year have been removed from the statistics by early resolution when we talk about formal complaints. So how do we compare like for like formal complaints for last year to this year?
We did have the early resolution last year. It's just that we've recorded it better this year.
Perfect. Thank you.
But if I could just follow up on that, what we don't have is data on the early resolved complaints from last year. So we don't know if that figure is going up or down, and even though it's good that we're resolving things quickly, it still takes officer time, etc., etc. If we can reduce that, that's also a good thing, right? So that would be a good thing to I think Councillor Davis has picked on a good thing there. We could actually include that data as well, and it would give us a broader picture.
I can pull that all together and send it over. Great,
thank you.
Maybe not tonight though.
That's fine. Okay, Councillor Smith.
Thank you, Chair. A couple of questions. You mentioned the fact that the local government and social care ombudsman seems to have gotten round to dealing with your tranche of areas, but I was just wondering if I'm sure every complaint is unique and has its own particular issues, but is there a mean time to determination of the complaints by stage, and also is there such a metric for the things that go to the ombudsman? Because it seems like there's an awful lot of LGSCO cases are either not investigated or are still to be determined, and I have no idea whether that's 6 weeks, 6 months, 6 years.
Oh, so the LGSCO try to do all their work within 6 weeks, but during COVID they actually shut down. So they actually shut down and they said no, we're not working, and they had quite a few weeks where they were not working, but people were still sending in their requests. It wasn't until about September of last year that they started getting to the backlog, and I think that's why we've seen an increase. But yes, we have a guideline. With our stage ones, it's 15 working days. With our stage twos, it's 20 working days. And the LGSCO will only look at complaints that are under 12 months old. But they normally try and do it within a 6-week window. But at the moment, I think they're around about 10 to 12 weeks.
Thank you.
Yeah, Councillor Harper.
Do you log the time that officers spend dealing with complaints? So obviously you've got some dedicated staff, but I'm sure it goes to other staff who have other jobs. So are you recording time, and do we know therefore the overall cost to service these complaints?
It's not something we've actually done. It's not. We do have someone that's full-time on stage twos and LGSCO inquiries that come in. But it's not something that we've actually tracked with the services, because the services will spend time on it to start with. It might be something that we should look at.
I mean, does the council have time recording systems for staff in terms of what work they're doing? Because if they're multitasking on different projects, is there, time tracking?
No, we don't have a time tracking system.
Talking to people on the doorstep, there's often complaints that, I've been made inquiry to the council, or I filled in one of the online forms, I've never had a response. How do you record those sorts of I can't get anybody to talk to me complaints?
We do our best to. Now, if someone fills in the online form, they get an automated response from our service. So it's an automated response to acknowledge that we've received it. And it also advises them that they should have some correspondence within 5 working days. Now, at that point, my team will send it to the service relevant, because it could just be a simple request. We send it to the service and we tell the service they have to respond, and we give them the date, which is 5 working days, must be responded to by then. We then follow up. So it's something we haven't been able to, but we have recruited a couple more staff to do this, and we can now follow up and chase them to make sure it gets done, because it's something we are aware of has in the past not happened. So even though they've had their auto acknowledgement, they've not actually had a personal acknowledgement or that initial phone call. So this is where we're working on it. We are doing our best to make sure that doesn't happen, but it's still, on occasion, things slip through the net. But the majority of the time now, I would say 80 to 85% of the time now, that doesn't happen. They will always get that personal response within the 5 days.
I think to add to Claire's comment, what we found in terms of a trend is that if maybe somebody emails directly into a person and copies in lots of people, there is then a delay in dealing with that complaint. And the reason for that is probably several reasons. Firstly, maybe somebody thinks that someone else is dealing with it, and then it falls between services, and what you don't have is potentially someone taking ownership. So if it comes through, we have an online form, but obviously we can run a mediated process for people who can't access online, so that it's absolutely inclusive. If somebody phones us, we can use the same form, but we can complete that for them, so that's not a problem. But it then gets recorded. It then goes directly into the system, which means that it's logged better. So that's why our accounting's got better over the last 12 months or so, because we have a system that can record that. The problem occurs and delays occur when it doesn't come through a central point, and people have people's email addresses, and then it might sit in an inbox because someone's on leave, or it might be that inbox isn't monitored daily, or whatever. There's various different reasons. So I think if what we found, included in terms of trends, is if it comes through a central point, then it does get dealt with quicker. And of course, Claire's team is now monitoring that too.
Can I have a supplementary, please? So do you get many complaints about councillors not responding to residents?
Councillors? No, I don't think so, Claire, do we?
No, I don't think we get many, because they don't tend to go, because when on our complaint system, it says if you would like to complain about a councillor, and then it diverts you off to a different system. So
I think Andrew gets sort of things.
Yeah.
Okay, any other questions? Councillor G.
Yes, I've left mine to the last because it's a bit nitpicky. So I couldn't work out where the 71% of complaints were resolved without formal escalation to stage 1 came from. Because there's 305 and 427. And when I add those together and I divide 700, put 427 on the top and 732 on the bottom, it comes to 58%. Is there something I'm missing here?
Sorry, where were you adding up one of the figures?
On the executive summary,
Yeah.
I divided 427 by 305 plus 427, and it came out as 58%. So I was just wondering where the 71% came from. It's very nitpicky, but
I will need to check on that. I will need to check on that, because there will be a reason. There will be a reason behind it, and I am sorry I can't answer it straight away.
That's okay.
But I will check on it.
Thank you.
I think what it might be that the individuals concerned, because if you look at the number of individuals, then it doesn't quite work, but it nearly works. But anyway, they'll come back on that. Thank you.
Yes, I will come back on that.
One. Okay. Right, any other points from members? Okay, so thank you very much for that, officers. I mean, we have got an increase there of sort of 25%, which is initially alarming, but you've explained why you think that is, and obviously we'll look to track that going forward. And if you can circulate to the committee the last few years' worth of data, and also that point on the comparatives on the early resolved complaints, that would be great. Thank you. Okay, so that's
Thank you.
Thank you very much. That's for noting. Okay, the next item on the agenda is an update on the financial statement saga for 2021. So is Stefan taking this, or Mark? Who's introducing the update on the financial statements? Graham.
Yes, it's not me, it's Stefan, but so Stefan, it's an EY report, so Stefan will take it forward, but obviously we'd be happy to help out with any questions from that.
Sorry, so this is the update on the 2021 audit, not the audit planning report. Yeah.
Good evening. Sorry, I just for I'm sorry. I'm happy to continue with the audit planning report. Graham,
If I could just interrupt you, sorry, but there's an item on the agenda that is a verbal update on the 2021 statement of accounts.
So let me take it, Chair. If my apologies, I was under the impression that EY would lead on it, but let me take it. We've obviously got mixed up between us. My apologies. So as we reported at the last committee, where we presented the reports at that stage, there was two issues outstanding. One was around pensions, and one was around the infrastructure, an infrastructure issue that had been raised nationally. So at that point, neither of those matters were resolved, and therefore we were unable to give a full sign-off of the report. At this point, neither of those matters have moved forward. So we're waiting on the pension fund, which is waiting on Royal Borough of Windsor and Maidenhead's accounts, and we understand that they're likely to conclude, or we hope they're likely to conclude in August. So at that point, EY and ourselves have done all the work. So as long as there's no changes to their current standing, we're hopeful that will be a quite quick sign-off, and we can progress forward. At the moment, the only assurance Deloitte, who are their auditors, will give us is that their works continue and they don't expect any changes. But obviously, until they finalise that, we can't be 100% sure. So that's the matter around the pensions. With regard to the infrastructure issue, so just for members' information, these are for roads and other such infrastructure items. What's happened historically is where we spend money to relay the roads, we just add that to the capital asset value. At an audit meeting, a national audit meeting, it was raised by one of the audit companies that this wasn't appropriate and doesn't reflect the true value. Just for clarity, it doesn't really affect anything above the bottom line, so it doesn't really have a massive effect. But they were of the belief that it doesn't reflect the asset value. So CIPFA put out a consultation to understand what might be the best approach with this, including what might an interim arrangement be that could help councils to close their more immediate accounts while a longer term solution was sought. We input into that consultation. However, we haven't had any feedback of what the next steps will be. We've been awaiting that, but that hasn't come back as yet. So I don't have a timeline, I'm afraid. We are working on what options we might take forward if that work continues to delay. So we could ask to close the accounts off with a gap, but that would be a gap in our accounting. We could do a significant amount of work on the basis we believe this is what might be required, or we could continue to wait. But one of the issues with waiting is it kind of backs up this latest year's accounts. So our proposal is that we will hold on. We will see what CIPFA come out with, because we're expecting something soon. And then to the next committee, we will report an updated position and potentially a proposal with the way forward. So I think, Stefan, that probably covers it. I don't think there's anything else.
Yes, no, that's
Thank you.
That covers it. Thank you, Graham.
My apologies for the mix-up, Stefan.
No,
okay.
no, not at all.
Okay, any questions from members? Yeah, Councillor Harper.
Would it be sensible to set a deadline so that we work to that deadline and make a decision by that deadline rather than letting it drift on even more?
Can I propose that we'll have the update at the September meeting? If there's still no progress on one or either of those issues, that we make a decision at that point as to how to proceed. Yeah. Members happy with that? Yeah. Councillor G.
Yeah, so from what I understand by reading the council audit planning report for this year, is that the infrastructure assets, the problem is that assets have not been removed from the asset register, either the cost or any accumulated depreciation. So you said it would affect the bottom line. Is that because we expect to remove assets where the cost is greater than the accumulated depreciation, but we get no proceeds for it, so we're making losses? And if so, what is the extent of that loss due to derecognition of these assets?
Could I just ask another question related to that while we're talking about the infrastructure assets? Because as Maria says, it does have an effect, because it basically is inflating your assets, isn't it, and increasing your depreciation because you're effectively double counting an asset that's you're counting an asset that's no longer in use. But I mean, my point was really about why this is suddenly an issue, because is it not in the IFRS that this is the standard way of accounting for us? It's certainly in FRS 102 that's how you do it. So I don't really understand why it's suddenly become an issue, and it's not something that the auditors have been looking at for years.
So if I can ask the first point, so and I probably wasn't clear. So it doesn't affect the bottom line, and what I mean by that is there was some work done some years ago, because I think there's an understanding that this asset value doesn't, the way it's done at the moment, whether it's done, I guess, properly, fully, or done by just adding on any extra expenditure, doesn't truly reflect the value of what a road would be, and it's a road that you couldn't sell anyway. So in terms of the numbers, it doesn't have a material effect on our accounts or an impact on our residents and the cost of services. That I probably didn't explain that very well, but that's what I meant. There's a number of ways you can assess it. Maybe Stefan, you could answer the second bit about being picked up previously.
So I think in terms of certainly in terms of the infrastructure assets, is that we assess whether or not the infrastructure assets and so this issue impacts the additions that were incurred during years running from 2010, and mainly pertains to where assets have been replaced during years. So our focus has always been in terms of the assets, the replacement assets, and whether or not they do meet the requirements of the capitalization. However, in terms of this issue that came about, this has more to do with the actual accounting of the infrastructure and whether or not these are at a granular level to enable the councils to be able to de-recognize components within the infrastructure that have been replaced. So, yes, I probably, yeah.
Okay, if I could come back on that, and I expect Councillor G wants to as well. So in terms of, one question was why has this suddenly become an issue? What's changed that has meant that the auditors are now very interested in this and are unable to sign off the accounts? And secondly, to you, Graham, I think you said it wasn't material, but surely it is material, otherwise the auditors wouldn't be holding up the accounts for it. So Stefan, I'm interested why is this suddenly an audit issue at the last set of accounts, and I don't believe it has been before?
Well, this has certainly been raised at a sector-wide level with SIPFA, and as far as my knowledge goes with this, unfortunately, Helen Thompson, who's the engagement partner, is not able to attend tonight's meeting due to prior commitments. So what I would suggest is if we aren't able to sufficiently answer your question, I probably would suggest that we take this over to the next committee meeting or respond to you outside of this committee meeting. As far as I know, this was raised by another audit firm with SIPFA at a sector-wide level, and this necessitated a revisit of by SIPFA of and the councils of their infrastructure assets that had previously been recorded, and whether or not is sufficiently detailed to enable the derecognition of these assets. So this is not particularly a specific issue that pertains to Wokingham, but rather a sector-wide issue that's affecting local government, and not just within EY, but within all the audit firms.
Okay.
So
Councillor G, did you have a follow-up?
I think, sorry, I think there is also a further interpretational issue in terms of the SIPFA guidance that has come to light, because these assets, and there was a revision to the SIPFA guidance, as far as I know, back in 2010. But this has subsequently come to light recently that has necessitated this consultation.
Okay, thank you. Councillor G, did you have a follow-up, and then I'll come to Councillor Davies?
Yes, I do. I'm not really following the argument, so I would like an explanation from Helen. I'd like to know how these assets are accounted for in the first place, whether in fact they are recorded at cost and accumulated depreciation, or whether they're recorded at that funny replacement, what's it called? Graham, can you remind me?
It's the former, Councillor.
Yeah, it's the former. So they're recorded at cost and accumulated depreciation. So I'd like to know about that. I'd also like to know if our asset register is accurate, as Stefan just mentioned, that we may not know at a granular level what we need to de-recognise. And also, I would like to know, or have an estimate, even if we take out the amounts from cost and accumulated depreciation, how much we're taking out of cost and accumulated depreciation, because as Rachel mentioned, it must be material. So it may not have an effect on the bottom line, but it does mean that our accounts are not accurate, and they're not accurate by a material amount, which does matter. So if we can have those in a written and introduced into the minutes of the next meeting as an addendum, so that we can, so that residents and other councillors can understand what's going on. Thank you.
Yeah, thank you. Are members happy with that? Yeah. Okay, Councillor Davies?
Pretty much the same question, but maybe just to help clarify for me, obviously you mentioned it is a sector-wide issue. Excuse me, and this is the interpretation of the SIPFA guidance. Is it my understanding that this is related to what the types of assets that councils hold? You know, we have roads and other things that are not handled in the usual way, because I'm slightly confused why assets, which are fairly standard things to handle in accounting, would be surprised by this. Is it those non-unusual assets in roads and such?
Yeah, that's exactly it. That's exactly it. It's things like roads. They're specific to a council that we couldn't sell. They haven't got kind of a realisable value in the same way.
And thank you. That this was going to be my follow-on. So for things like, for example, the commercial development in Numsfield, you believe that we are handling the recognition of those assets which are material correctly today. Okay, that's good. Thank you.
Absolutely. Yeah.
Any other points from members? Councillor Smith?
Yes, thank you. So, sorry, to go back to pensions, did I understand you to say it was the accounts at Windsor and Slough that was holding up the pensions part of the accounts? Because it's also, this pensions issue is also blocking, for example, the Royal Berkshire Fire and Rescue Service annual accounts as well. Presumably hundreds of other organisations.
Yes, I'm happy to take that one, Graham. So in terms of we need to obtain assurances from the pension fund auditor of Royal Berkshire and Maidenhead. And we essentially received assurances, but with a caveat on the letter, stating that their audit was still ongoing. So as far as I know, they do have objections, and the audit is ongoing, which is expected to be finalised in August, as Graham has alluded to. And and the pension fund auditor has indicated to us that we could expect the caveat to be removed on this letter in September.
And just to add, as you say, it does affect all of the councils that are under this scheme. So and the fire, they're all in the same position.
Thank you.
Any other points, Councillor Hart?
Do we have any flexibility in terms of who manages our pension fund? If they're not providing a decent service and signing them off, can we move to a organisation that manages things a bit better?
Sorry, Graham. I do believe that is probably a question for the pension fund and Royal Berkshire.
Yeah.
But I do know that there is regular meetings being held with the relevant councils and the treasurers. So that is probably something that could be raised at, during that platform. I don't know if there's anything.
Yeah, I mean, just to add, so I'm new to Wokingham, but my understanding is there's been some problems and delays for a period. But in fact, as Stefan said, I think the chief finance officers from across all the organisations have been supporting the fund to improve, and I believe have had some further assurances that it's moving in the right direction, and hopefully going forward such problems won't reoccur. But I'm sure chief financial officers will continue to keep a track on that and to influence how that work is done going forward.
Thank you. If I can just come in on that as well, I suspect it is a question for Wokingham as to whether they change provider of pension, but the penalties of withdrawing from a scheme like that would probably be immense, I would imagine. So I think it would be within our gift, but it would probably be extremely, extremely expensive. So, okay, any other points from members on that? It is just to note, it's just an update. And as I said, at the next meeting, we'll look to see where we are and make some concrete decisions on how to go forward with these accounts. Okay, thank you very much. So the next item is the audit planning report for the following year. So if I could hand over to Stefan to introduce that, please.
Thank you. I am the external audit manager from EY, responsible for the audits of Wokingham Borough Council. As I previously mentioned, unfortunately, Helen Thompson, the engagement partner, is not able to attend tonight's meeting due to prior commitments. The purpose of this document is to explain to the committee the audit risks we will be focusing on during our upcoming audit for 21-22. Our audit processes remain ongoing, and we will provide a further update to the committee upon the conclusion thereof. I will turn your attention to pages 29 to 32 of our report. These pages seek to outline the risks that we've identified and will be focusing on during the audit. These risks have remained largely unchanged from the prior year's audit, except for the risks around the accounting for COVID-19 grants and unreconciled impressed accounts in the prior year's audit that are no longer considered focus areas for our upcoming audit. The new focus area for this year's audit is around the accounting for infrastructure assets. As we previously discussed, this is a sector-wide issue around the infrastructure assets that have been raised by SIPFA. There is a consultation process currently underway to determine the way forward on this, and depending on the outcome of this consultation process, depending on the outcome of this, the level of risk attached to this may vary, and we will update the committee at a later stage should this change. I will also ask that you take to page 38, which outlines our proposed audit fees for 21-22. As the audit of 2020 2021 is still ongoing. The final audit fee will be determined upon finalisation thereof and discussed with management. This will subsequently also be presented to the committee. I need to point out that we've subsequently identified an error in our report. In column planned fee, the revised scale fee is incorrectly shown as 139,980 instead of 154,643. I would also like to draw to the committee's attention the fact that the PSAA has recently determined a final scale fee variation for the 1920 audit of £68,541. Yes, so that concludes my presentation, and I'm happy to take any questions from members.
Okay, members, who has a question? Councillor Davis, yeah, go ahead.
Thank you. It is just on the fees, and I had noted that discrepancy. I just find it surprising that your planned fees and your final fees are going to be fully aligned unless that's a fixed price contract, and I didn't believe it was. Similarly, I'm also surprised that your planned fees for 2021-22 are identical to those same final or planned fees for 2021-22, given the inflationary environment we're in. Could you just confirm where that's come from?
So I do apologise if I've misinterpreted the member's question, but in terms of the scale fee, so with regards to the first question, the scale fee rebasing fee is essentially our assessment of what we consider the risks and the ever evolving risks that relates to audit, and what that would essentially cost or be to cover those risks. So that is a standard fee or increase in the fee going forward. In terms of the additional fees that were set by PSAA, these have been based on the latest guidance that we've received from PSAA, but that pertains to the 2021 fees. So that is, at this moment, the guidelines that we've received from them.
Other questions from members? Councillor G, then Councillor Harper.
Yeah, I'd just like to build on what Councillor Davis said. If we have got an increased risk to do with infrastructure assets, then why is the fee for 2021-22 going to be the same as the one for 2020-21? I still don't understand that.
So the costs involved with the additional risks that we've identified, that's yet to be determined based on the hours that we will spend. So this is just the base fee that we are looking at, together with the scale fee rebasing. And that was an exercise that was done about 2 years ago. So that wouldn't cover the additional risks pertaining to the infrastructure assets.
Councillor Harper.
Just looking at page 27 of your report, in fact, the second paragraph talks about the Department of Learning, Housing and Communities paper titled Measures to Improve Local Audit Delays. It appears that in order to improve local audit delays, they've just pushed the deadline out by a few months. Is that a correct interpretation, or it doesn't seem like very helpful? They're just moving the deadline rather than actually improving the speed of audit. Is that an interpretation? Well, if my accounts were that late, my accountant would be all over me, and in fact HMRC would be all over me. So I'm not quite sure how local government get away with it.
Yes. So the publication date has been moved out for the 2021-22 year. As far as I know, they are planning on revisiting this for the next financial year. But I don't know if Graham, if there's anything.
Yeah, if I might add, it kind of stems from COVID, and during the COVID period, more leeway was given to in the whole of accounts. So the period for resolving accounts and closing them off has been moved, and we're still in a kind of catch up with that. On top of that, and I think it's detailed in the report, there is a recognition nationally of a resource issue across audit firms, and the speed of which that work can be done on the audit side as well, of which you'll note, I think there's a number of comments of actions being actively taken across the market to improve that position. So my understanding is that adjustment is to allow for both sides, because as you'd imagine, as we move back, it moves the following year back, and hopefully by next year moving round, we'll be back on track and in a normal timescale.
Councillor Smith.
Thank you. I have a couple of questions. On page 30, where you've got the new risk for 21-22, second sentence begins, once an item of PPE has been recognised. What is PPE, please?
So that is the abbreviation for property, plant and equipment.
Thank you. Yeah, well, I didn't think of that. Okay, thank you very much. Going back to the fees, as I sit here, I'm not entirely sure what my role is with regard to the fees, and I've actually no idea as to how I would consider whether they were reasonable or not. I don't know whether the chair can perhaps tell me what my role is, or...
I think it's our role to have a view on them. There's nothing that officers have raised with me that's of any concern with regard to the fees, so that gives me some comfort.
Okay.
If I may, Chair, I think it's just probably worth mentioning that these fees, so these fees do get submitted to the PSA as part of the contract that we have with them, and they then review and determine whether or not these fees are appropriate.
Yeah.
Okay. Yeah.
Okay. Another question, if I may. Under value for money, how is value for money considered on very large value contracts and the management by officers? Or is that not part of your audit role?
So certainly that forms part of the scope of our consideration. So during our planning process, we look at the various arrangements that the council has in place to ensure the areas for economy, efficiency and effectiveness. So that would be part of our consideration.
Okay, so is there a simple way of me to understand what large value contracts there are by department? Is that something that we should be thinking about and wondering about?
So I think for the purposes of this report, at least, I probably just need to highlight that we haven't performed any of our, we haven't concluded on our value for money risk assessment processes, so that remains ongoing. In terms of your question, as part of our consideration, we would assess whether or not the council has appropriate arrangements and procedures with regards to their contract and procurement processes. So I don't know if that is sufficient detail to answer your question, or if you wanted
If I could just come in there, I mean, this part of the meeting is for us to get some assurance as to whether the audit strategy is appropriate. And so if you've got questions of detail about our big contracts, I'd suggest that's a separate issue, and perhaps follow up with Graham outside the meeting, or myself if it's something that's of concern.
So for example, in the Treasury report we're going to consider shortly, one of the reasons for one of the figures overrunning was the town centre regeneration. And having watched it at close quarters for over the period of time it took place, as a construction manager, I was unimpressed with the processes. I've no idea what the contractual arrangements were, But I'm hoping that the WBC were not paying for the significant amount of rework that occurred through bad management and bad working practices. I don't know how granular the external audit goes into those sorts of things, but that's me not understanding it.
Okay, I think that's a valid question, Stefan. To what extent do you go into the detail of contracts such as that Councillor Smith mentioned in terms of your audit approach?
So, as part of our planning processes, we do consider information that might indicate weaknesses, and then based on that, we would then assess that further to determine whether or not there are weaknesses. Like I said, we have yet to commence with the VFM planning for the 21-22, so that's certainly something that we would consider.
May I just add? I think it's fair to say, Stefan, that the work wouldn't specifically get into detailed contracts and the performance and value for money of those contracts. My understanding is that in the work you do closing the accounts and the kind of validation of the accounts, if anything jumped up as being a risk issue, that would feed into your overall VFM assessment. But
yes,
this wouldn't give you an assurance on a particular scheme or a particular project or a contract that's been let in a value for money way, contracted or cliented in a value for money way. That would probably come more from internal audit work, I'm guessing, and internal assurance work.
Okay. Any other questions? No? Okay. Thank you very much. That's just a note. Right. So now we move on to the Treasury outturn report. So again, just to remind members of our role in this, the main reason we check this is to check compliance with our Treasury strategy, which this committee also reviews. I think we need to strike a balance between asking lots of questions of detail, but also being able to probe and ask the right questions to get that assurance. I know some members have already asked some questions outside the meeting, which is much appreciated. So who is going to introduce this? Is this you, Graham?
It is, Chair. Yeah, myself and Mark is here to support with the complex and the detailed stuff, if that's okay. So thank you. So Treasury Management Outturn 21-22. So this is an update on the position brought to the committee at the end of November. And what we're asking of the committee tonight is to recommend this report to the council. I think particularly noting in terms of recommendations, the performance against the strategy, as you've just mentioned, the point that the income generated from the investments provides a net benefit to the council still and to council's key services. That is reduced because of some of the market pressures and additional MRP contributions, but still a significant contribution overall to the council. To note also that the general fund debt, external debt, has reduced and is lower than we expected. A lot of these factors are down to reprofiling of capital expenditure. And finally, just to note the level of realisable assets, which links a little bit to the infrastructure assets, which are not realisable, but just to give comfort in the level of realisable assets against the debt we have outstanding. So very happy to take any questions.
Okay, open it up to members. Okay, Councillor G.
Yes, so all the approved indicators are set out in the Treasury Management Strategy have been adhered to. So I'm looking at the table on page 45, and it's quite clear that the percentage of internal borrowing to CFR, the strategy was 29%, and it's 44%. So I don't think, without explaining why and noting that as an exception, that we can agree the recommendation 1.
So thank you, Councillor, and thank you for your questions prior to the meeting. So I guess firstly, we would absolutely agree that that is outside of the target, I think, and we'd recognise that I think in hindsight we should have put some more detail in that to explain why. The reason it wasn't is because it's not a negative impact. The reasoning is the reprofiling of the capital expenditure, an increase in inward grants and the timing of inward grants. So a number of positive aspects that have meant we've had to borrow less, or we've got more internal income to surface and see debt. So it's a positive. We certainly wouldn't want to borrow a whole load of money to get that percentage back into the target zone. But I appreciate your comment that you're right. It is outside, and we should have made reference. What I might suggest, if it's helpful, is that against the recommendation, we make a specific comment around that target and the difference, and note the impact of that difference on the council's position.
Thank you. So I received a detailed reply from Mark, for which I'm grateful. I would be very happy if that were repeated to say that the 44% is outside. I understand why, because the external borrowing has gone down, so that has necessarily gone up. But I think it does need to be noted as an exception, and then an explanation as to why it is an exception and why it's positive. Just because it's positive doesn't mean that we should ignore it. Because otherwise it just raises questions. So I'm very happy for Rachel, the chair, to liaise with you afterwards, if everybody else is happy with that, and to make a note. Is that okay with you, Rachel?
That's absolutely fine. So we'll add a note into the report and we'll change the recommendation. We'll come to that at the end in terms of the wording of the recommendation.
Okay, thank you.
Did you have other questions, Councillor G?
Yes, I do. So table A, I'm a bit unhappy about this net annual benefit to the taxpayer. I've raised this with Mark as well. So I understand in here that there is interest income from the subsidiaries. So and that's why I asked the question about why some of the income had gone down. It was because we're not charging as much interest as subsidiaries. However, the taxpayer will be incurring a cost because the subsidiaries will have an interest cost in their accounts. So from my perspective, this is misleading, because there is, when you consolidate WBC plus the subsidiaries, that benefit will disappear. And I do have some further concerns about that too. Thank you.
I don't believe that's the case, in that those subsidiaries, that's an element of their cost of which they will be charging an income, delivering a service and a benefit to make them an ongoing concern. So my view is that they're a separate entity, and that overall they will be providing and dealing in a profit situation over a long period of time. So I don't believe that should be taken off the value, for both the point that it's a different organisation and that in essence they will be managing their financial position overall, and that is one cost that makes up the overall business.
I think I'm going to have to quibble with that. So our income is their cost. Taking WBC and its subsidiaries, which is the way we have decided to manage the housing companies, there is no benefit overall to taxpayers of amounts transferring from the subsidiaries to the council. And if I might note as well, the subsidiaries have accumulated losses. So I'm very concerned that what we're doing is accumulating losses in the subsidiaries while recording increases in the general fund by including this amount here. To my point of view, that's misleading, and the net annual benefit to the taxpayer is not substantiated in my view.
Yeah, I don't believe those organisations in the longer term will be making losses, because they'll be set up to run as a self-financing model. And I believe in the same way that if they run as a self-financing model as part of the council, that wouldn't show as a cost and affect that number in the same way. So I understand your point respectfully, councillor, but I don't agree with that position affecting that number.
May I follow up, Chair? Okay, so imagine that we've got a subsidiary which has got money in its bank account, and that subsidiary but it also owes WBC money, and then WBC borrows money to fund the subsidiary. So what I'm seeing is, after I take off the money that flows between the two, is that a subsidiary may have money in its bank on which it's earning, say, 1%, but our CFR, supported by external borrowing, is incurring interest at, say, 3%. So if we take out the intercompany transactions, what we've got is a subsidiary sitting on money, which they are, and WBC as a standalone entity borrowing money to fund loans to subsidiaries. So I think this switch between subsidiaries' losses and the general fund is misleading. And I think also not having subsidiaries repay WBC because they have got money in the bank, and I don't really know why they're not repaying it, is also not very good for the taxpayer, the local taxpayer. I also wonder whether actually borrowing in order to make an apparent profit in WBC breaches the Prudential Code of Conduct, because you can't borrow to make money.
There are rules around the interest rate that we can charge to them, which we obviously align to, and are not breaking any codes. I think in terms of this report, again, respectfully, I think the question is about the number shown in the report and the Treasury strategy rather than the Council's approach to subsidiary account companies for housing purposes. As I say, in my view, professional view, that number is valid because it reflects the impact to Woking Borough Council's accounts, in the same way that if the council benefited from dividends from the company, we would reflect that in the same way. So we're treating that in a consistent manner.
I don't think I'm going to be able to approve the recommendations report for item 2, unless we have some sort of comment about the fact that there is a corresponding cost within the entity that WBC and its subsidiaries taken together, unfortunately.
Thank you, Councillor G. Councillor Davis.
I think the point is that this is not the committee to debate the way that these councils structured its organisation. We're here to audit and assess what's being said. I think, as been said by Graham, these organisations were set up to be entirely self-funding and self-managing. The directors now are part of the ruling group here, so they're free to dissolve that organisation if they see fit. The way it's been set up, I think, is fair representation because it does represent the losses. I believe there have been some losses incurred. I think the net position is expected to be break even in the long term. As you say, there are funds there, but they're there because they're to be managed as a self-funding entity in the longer term, and that money can be extracted via dividend, which is again a fair and reasonable way to do that. So it seems perfectly legitimate the way this has been set up. I can understand your objections, but I side with Graham. I don't agree with them, and I'm happy to approve them as they are.
Any other comments from members? Graham, how would you? Could we actually add a paragraph underneath the table to address Councillor G's concerns and at least explain in a certain amount of detail what the point that we're discussing here? Could we add something? Would that satisfy you, Councillor G? Would that be something we could add in?
I think it would just be whether. I don't mind adding some text in. I'm just not sure we're of the same opinion of the overall impact, i.e. the end point, because I think in our opinion, in the council's opinion, it's a valid number which reflects the overall income. And as I've said, any cost that's in another company is for that company's accounts and actually is part of their business model, which will overall wash its face or become self-financing. So I'm not sure what sentence, because I think the councillor's view is it's a cost. So I'm just not sure whether we could agree words that reflects our opinion in the same way, because I don't think it is a cost.
Okay, Councillor G, do you have a proposal for this part of the report? I mean, I appreciate also what Councillor Davis is saying about not getting into the weeds, basically, but it is one of the key recommendations. So I'm also sort of keen that we can come to an agreement. Is there something we could add in that would satisfy your concerns?
Yes, I'd like the net annual benefit to the taxpayer to be clarified between the amount that's accruing to WBC, but also the offset in that the subsidiaries are incurring costs. So if I went and had a look back at last year's, and last year's report like this had £727,000 as income from the housing companies, and I'm assuming that's all interest, could be wrong, and a net annual benefit to the taxpayer of £736,000. So taking out that £727,000, which I can't see this year because it's tied up in housing, local economy and regeneration, taking that out, the net annual benefit to the taxpayer was negligible. What I'm worried about here is that I can't see how much is in housing, local economy and regeneration that comes from the housing companies. And I don't believe that we should look only standalone at the net annual benefit to the taxpayer, because actually the taxpayer has, when we look at WBC plus the subsidiaries, then together there is, it should be cancelled out by the cost in the subsidiary company of the income in WBC. I'd need that explained, I think.
Okay, Graham, is that possible or not? Could we add a little bit more granularity to that we apparently had previously?
Is that a response to Councillor G's question? With regards to Table A, although we're showing the income from the companies for the loans we've made, in the top row of Table A will be the cost to the council for providing that expenditure to the companies through a loan. So I think the bit would be the net margin that the council makes on that interest would be potentially what we would look to maybe add to a note to say off the net benefit to the council, there's a net margin of X £100,000 in relation to the way the council finance support our housing companies in delivering affordable housing. So I don't think that would it wouldn't turn us from a net benefit into a cost to the taxpayer, because I don't think that margin is in the region of £700,000.
No, what was included last year was the income of £700,000. I understand that the cost of the loans is included in the top line. The cost of the loans to WBC is included in the top line. It's the fact that the income to WBC is effectively cancelled by the cost to the housing companies. So when you're looking at WBC as a whole, then there is no net benefit, and the 727,000 or equivalent this year should be noted as something that is a cost in the subsidiaries, which will wipe out, in effect, the net annual benefit to the taxpayer. I'm not sure, unless that is explained, that I would be happy with this report.
Okay, I think. Sorry, go on, Graham.
Sorry, Chair. So my concern is that what that won't then reflect is that cost is enabling an income stream and an investment. So I don't think you can just look, as Mark maybe suggested, maybe we could show a line that shows there is a charge, but I don't think it would be fair to say that's a cost even across the wider organisations, because it's enabling an income stream and a return on investment that then's not reflected because that's in their accounts.
Okay, I think we'll probably need to move on, if that's all right. Other questions from members or comments? Okay, I just had one on page 47 again. It's just that the total gross finance cost has increased slightly to 8.8 million, but yet the borrowing overall has decreased. Could you just explain that to me? And I know the difference will be the MRP, which has gone up, but could you just give me a bit more detail on that? Because, at a glance, it looks wrong, but obviously it's the MRP that's making that difference.
Mark, are you able to give that bit of detail, please?
Yeah, so Yeah, you're quite right in terms of we've borrowed less money, so therefore our debt costs have gone down. But we have seen since the mid-year, interest rates have started to go up as well. So although we're paying less on debt, rates are slowly going up, which was what we saw in the last quarter of the year. When we, at the point of the mid-year estimates, we were still closing the 2021 accounts, and part of that work with the auditors was looking in detail at our town centre, and in particular at what point certain assets are operational, because as soon as they become operational, our policy is we start charging MRP for those. So that's why we've suddenly, in the outturn report, upon reviewing the town centre position and some of those assets, we've actually provided an additional amount of MRP higher than what we originally planned when we done the mid-year forecast, because at that point we were still working through the 2021 accounts, and in particular the asset register and the town centre position. So although there's a net increase, there's a reduction in interest costs, but on the plus side, we've paid off more MRP on the town centre.
Okay, thank you. Any other comments? Okay. Oh, sorry, Councillor Harper.
Just a clarification on page 50 with the graph. The figures to the side says they're in millions at the top, and then you've got 1.6 million. So I'm assuming they're not millions. There would be six. So one with too many zeros after that. I'm assuming. Also, you're showing these figures from 2021-22. It would be helpful to see historically what these figures have been in the past, to see if these are normal figures or not. Is there a possibility you could provide as a follow-up, just for me, perhaps for the committee, the historic figures?
Yeah. Apologies, my screen's not showing the graph for some reason. Yeah, we can pass it out.
Okay. Right, let's go to the recommendations then. I think we should look at these individually. So, and I also want to add one. So we agreed that a short explanation would be added to explain the internal borrowing in the body of the report, that the internal borrowing is outside the range, and that to be just run past me as chair. Okay. Then recommendation 1, that all approved indicators have been adhered to. If I can extend that recommendation to say that they have all been adhered to, noting the exception that the percentage of internal borrowing to CFR is 44%, which is outside the range noted in the strategy. Okay, so if we could just take a vote on, are you happy with that wording? Is everyone happy with those 2 recommendations to start with?
Sorry. Yeah, as long as we explain why the 44% is a good thing, just below the table.
Yeah. Yes. Okay. Sorry, go on.
Sorry, can I suggest maybe in the text is that it's 44% and noting there, which is a positive indicator, just because it is a good thing. We don't want people to worry about things that.
So the recommendation is that they have all been adhered to, noting the exception, the percentage of the internal borrowing to CFR is 44%, which is outside the range noted in the strategy, but that this is a positive movement. Yes? Okay, all those in favour of that? Okay, that's carried. The second recommendation, that the contents of Table A that we've just been talking about show a net benefit that equates to £22.25 per band D. And I see all those in favour of that recommendation. And all those against? Okay, that's carried. And then I'll take 3 and 4 together, as I don't believe that they're controversial. So at the end of March, the general fund was debt was 196 million, and number 4, that the council's asset value is 443, as you can see in the paper. All those in favour of those 2 recommendations, are we happy with those? Yeah, those 2 are carried. Okay. Thank you very much. And also, as we said, if you could circulate the historic figures for Councillor Harper, well, for the committee, that would be great. Thank you. Okay, so that brings us on to the last substantive item, which is the governance statement. So this has been improved and enhanced from previous years. Graham, Andrew, are you going to introduce this one?
Yes, thank you, Chair. So if I can just take members briefly through the document. If I start at page 55, the covering report. So the recommendation is to consider the draft annual governance statement, which is an Appendix A, for recommendation to the Leader of the Council and the Chief Executive, and then for subsequent publication with the 2021-22 Statement of Account. So just to clarify that, you will see the final annual governance statement come back at the same time as you consider the 2021-22 Statement of Accounts. So all local authorities have to produce one of these annual governance statements to sit alongside the Statement of Accounts. The document itself is really a sort of State of the Nation report, if you like, as I'd like to describe it in terms of the Council's governance arrangements overall. And the overall conclusion that we've reached in the draft document is that we've got a sound system of control. If I take you to page 56 and paragraph 2.3, what you've got there is a description of the 7 core principles that we've got in the Council's local code of corporate governance, which is based on the sit for solace model of good practice around corporate governance in local authorities. And that's been at the forefront of our considerations as we've reached the conclusions that we've reached. In paragraph 2.4, it sets out some examples of improvements that took place during the last 12 months, not least the work that this committee has done and the work that you've agreed in terms of bringing on an independent member onto the committee. But there's a whole raft of improvements that are set out in the detailed annual governance statement itself. And if I can move you to that now, which is at page 59. So this is quite a comprehensive document. It's modelled on best practice. We spent a lot of time this year looking at other local authorities in terms of how they convey their annual governance statement. So if I just take you through the sections after the forward from the leader and the chief executive. So we start off with section 1 that really sets the scene, explains why we need to produce the annual governance statement, the basis of the statement, and gives you that sit for solace framework as a reference point. Section 2 sets out our local governance arrangements and the framework that we've got in place, and goes into some detail describing how the various mechanisms within that framework work in the council. Section 3 sets out the actual review of effectiveness that we've undertaken, and there are, under paragraph 3.3, the bullets there's a whole range of different assurance mechanisms that we've used to come to the conclusions that we've reached, including, for example, the Chief Audit Executive's report that you considered at your last meeting. But one point through you, Chair, that I'd be keen for the committee to consider adding under that particular paragraph that refers to the Chief Audit Executive is the internal audit of corporate governance that took place during 21-22, which gave a good level of assurance and made some really helpful suggestions to improve governance in Wokingham, which we took forward during the year. So I'd like to add that into that section with the committee's permission. Section 4 is just very succinctly the actual assurance statement itself, that there is a good overall level of assurance of the council's internal control and its governance arrangements. Section 5 sets out the issues and the improvements over the last 12 months that we've dealt with, and improvements that have been put in place. Then the section 6, the main last section, is the areas of significance change during the last 12 months, some of which lead to improvement actions that you'll see at the end of this report. If I just refer you finally to page 70, which from 70 onwards sets out in some detail the assessment that we've conducted against those 7 principles of the core principles of good governance in Wokingham. So you can see sort of what is contained within each of those 7 principles and the assessment that we've reached against each. And then, as I say, finally, the last page of this document is the improvement action plan for 21-22. It's got 7 actions on there, which I'm very happy to take questions on, and indeed very happy if the committee has got suggestions of other areas of governance that we need to work on over these forthcoming months. Thank you, Chair.
Thank you very much, Andrew. Questions from members? Councillor G?
Yes, I was pleased to see that the Chief Audit Executive, that the reporting lines have been clarified to ensure direct access to the Chief Executive and Chair of Audit Committee. I've raised this before, but I'm just wondering whether the monitoring officer still reports to the Section 151 officer, and whether that should be directly to the Chief Executive. Thank you.
Yeah, if I could just respond to that, Chair. So yeah, we have considered that point previously. I know you've raised that point previously, Maria. What I would say in terms of sort of strength improvements that we've put in place over the last 12 months, perhaps specifically around that issue, although not directly, we have what we call the statutory officers group, which meets monthly, which is the Chief Executive, the Section 151 officer, and myself as the monitoring officer meet each month to consider all things governance. We have what we call a governance dashboard, which focuses on those 7 principles. So we do have a very holistic approach with all those statutory officers in the room at the same time, meeting regularly to consider things governance. So I think the short answer to the question is I think the reporting arrangements that we've got do give the appropriate safeguards to make sure that all of those 3 statutory officers can fulfil their duties appropriately.
Thank you. Councillor Harper?
Thank you, Chair. Just raising an issue on Section 6, changes to political balance of the council. It states that there's a minority Liberal Democrat administration, but in fact it's the Working Borough Partnership Group which coalesced to create a majority administration, so that section isn't accurate. So perhaps if you can update that.
Yes, happy to take that. Maybe just to remove the word minority from that section would help clarify.
Well, no, because at the annual council meeting, all the positions were voted on as Working Borough Partnership Group. So in effect, that is the controlling group, not the party, Liberal Democrat Party.
Okay, if I could take that away, Chair, and I'll come up with some appropriate words to take on Peter Harper's point there. Thank you.
Thank you. If I could come in on that as well. I mean, it's a Lib Dem executive. The partnership exists, but it doesn't mean that we are, bound to vote in the same way on everything. So I don't think that's quite correct, but I'm more than happy for Andrew to tweak the wording to make it more reflective of the position. Okay, Councillor Smith?
Yes, just to amplify that, Councillor Norman Jorgensen raised a point actually at the general meeting as to whether or not the Wokingham Partnership was a legal entity that could act as a majority group. So I think we should reflect the fact that it's not a Lib Dem administration, it is a Wokingham Partnership administration, and it is majority.
Well, I completely disagree with that. Sorry, because it's a Lib Dem administration. The partnership is, it's published. The wording of the partnership. It doesn't mean that the partnership are running the council. The Liberal Democrats are running the council in a minority administration. Okay, Councillor G.
Yeah, I'd just like to agree with Rachel. So it is a Liberal Democrat administration because the Liberal Democrats have all the administrative positions. However, there is a partnership, not a coalition. If there were a coalition, then the people who are not, the councillors who are not Liberal Democrats would have executive positions, and that's not the way it is. It is a partnership with a Liberal Democrat administration.
Okay, other points on the report? Councillor Smith?
Yes, under section 5, you've got 11 areas for improvement. But what I don't quite know from the report is what the relative weight is of each of those areas of improvement. You have one identified as cybersecurity, which personally I would think is extremely high risk and requires improvement.
Yeah, there isn't a ranking of those. What that section is attempting to describe is the things that we've put in place over the last 12 months in terms of improvements. I would agree. Obviously, cybersecurity is something that we've got to constantly work at, and we do have plans for that. You'll be aware through your review of the risk register that information management and cybersecurity is on there. And that will continue to be on there for the foreseeable. So that there's that mechanism for reviewing progress in terms of maintaining the council's assurances around cybersecurity.
Thank you.
Okay, I had a few points. So again, on cybersecurity, so this is page 66. I don't know if the wording could be altered slightly here because it's just quite a bland statement. Strengthen the council's cybersecurity approach in response to heightened risks through further investment and implementation of further controls. I'm not sure what that really means. So I don't know if a bit of additional granularity could be added to that to sort of assure us that it's not just a bland statement to cover off cybersecurity.
Yeah, no, I'm happy to take that away and I'll add in some more detail under that section in terms of what we've done over the last 12 months.
Okay, thank you. Then my next point was on page 71 to do with whistleblowing and fraud. So let me just find it. So it says there is a strong awareness of the whistleblowing policy, which is good because I know in some organisations it's a sort of thing that sort of sits on a shelf and isn't really used. So that's positive. In terms of the fraud arrangements, it says the fraud arrangements are being strengthened. Do you know what that means in a bit more detail? And also, how are the staff being trained and made aware of the current fraud risks and our fraud policies and procedures in the same way that there is a strong awareness of the whistleblowing side?
Okay, well, the fraud policies, which form part of the Constitution, will be coming back to the Audit Committee later this year for your consideration. We are in the process of putting together some online training for all staff around fraud and fraud awareness, which again, I'm happy to share that with the Audit Committee as well. And the internal audit team is considering its fraud strategy, and we'll be bringing that to the Audit Committee as well. So there's 3 examples of what we're doing, Chair, over this next year to strengthen in that area. Just on the whistleblowing point, the most recent staff survey that we had did show that our staff did have an awareness that the fact that we've got a whistleblowing policy and how to use it should they ever need to do so.
Okay, thank you very much. Any other points from members? Okay, so just to recap where we are. So Andrew, you're going to review section 6 just to ensure that it properly reflects the nature of the political makeup. As you mentioned, there was a corporate governance internal audit during last year which received a reasonably good rating, which isn't referenced. So if you could add that into the report. Other than that, are we happy to recommend this report with those slight changes? All those in favour? That's carried. Thank you. And this will be coming back in November, I believe. So we get an update on the action plan.
That's correct. Yes, you'll get that update then.
Okay, great, thank you. So that brings us on to the last item, which is the forward programme. So any comments or questions from members on the items in the forward programme? Are we all happy with those? Okay. All right, I think that brings us to the end of the meeting. So thank you all very much for your contributions. Enjoy the rest of your evening. Thank you.
Thank you. Thank you.